James Dalton used the term tempo while observing the open. Can you elaborate on that? Does it mean volatility or speed of movement? What Jim Dalton does is he has a next level understanding of markets first and foremost. So the words he uses, it takes a lot of time to understand. So what I have understood from his videos and what he means is it's similar to what we call trade facilitation. All right. So let's say you look at by tempo he means is what reward the traders are getting for their actions. All right. So here we open, we do not even go towards HVN, we try to go lower in A period. Then B period takes out A period low, then C period is a little bit weird, it's an inside bar, then D period breaks down. Now whenever such kind of activity is going on, he will say that the tempo is not good here. Selling is happening, it's not getting the price coverage that it should within a certain period of time. So here C period could not move below B period, then the D period went. But whenever this is happening, he will argue that this activity is not good. The selling here is not strong. This might just have been an attempt by the smart money to probably take out stop losses. Once now it is done, market might come back and try and see what was wrong, why the tempo was not correct in this zone. So how he trades is monitors this happening and he sees this lack of good trade facilitation and then sudden spike down. He'll probably start buying calls here. All right. And then what he will do is he'll observe how the market goes higher and how it reacts at different places. And if he believes that no, market is not doing a good job, he'll probably then sell futures against these calls. So he first buys calls and let's say he bought maybe 10 lots, okay, of at the money calls, and it goes a little bit in the money for him, and then he'll come from above and he'll sell futures against that. If the market is going to fall very, very sharply, then let's say he has bought 10 calls and he even just buys 5 futures against those. It's not going to give him loss, because even if it goes higher, the calls will offset the loss on future and he can get out at minimal loss. But if the market tanks, then at some point he can try to cover those calls, or he can just hold on to them, and market keeps falling. The call prices will be, the premiums will be recovered, and he'll even make more profit on the future. So he trades like that. I have seen a few of his trade ideas when he shared it on those free videos itself, and tried to make sense of it, like what exactly he's trying to do. This is how he likes to trade. But again, like his Jim Dalton can't do anything, because I have seen him do things that I cannot comprehend, and even if I tried, I cannot do it. That is more important. Like even if I try to do it, it is difficult. It's not easy. He can do it because he has that level of understanding of the markets and experience. Obviously, like he is trading longer than my total age, so that says something about the guy, right? He's been in the markets for almost 4 or 5 decades. That says something about the guy.